this is well communicated, very smooth reaction from markets, and so far the risk of spillover impact on other countries is being mitigated. It is, though, something we are concerned about, that action, if it is especially important to do more to fight inflation in the United States, could be a drag on the recovery here, but it can also transfer to other countries. What I want to stress, though, Sarah, because we tend to forget the broader context, is that the U.S. Policy actions have been remarkable to recover from the worst crisis we have seen in our lifetimes. Unemployment below 40%, GDP level almost at the pre-pandemic levels. This is a remarkable achievement. And in that context, the really important job for policymakers here, as it is for many others, is to balance the need to not throw cold water on the recovery, but also not to allow inflation to speed up. Our projections are that starting second quarter, we will see inflation going down as the very big numbers from 21 are out of the calculation of inflation rates. This is subject to dealing with supply chain constraints. And what we are seeing are some promising signs that some progress is being made in that regard.
Well, it is a delicate dance for these central bankers, especially for the Fed. As you say, there's been so much stimulus injected, monetary stimulus, fiscal stimulus. As that starts to go away and get withdrawn this year, how's the global economy going to handle it?
Well, we already saw in the end of last year that the momentum of recovery has been somewhat slowed by both US and China losing a little bit this impetus for growth. And that is already reflected in the impact these two big engines of the world economy have on the rest of the world. So we are going to come with our growth projections towards the end of the of the month, and there would be some downgrades. This being said, for 22, the impact of stimulus in the United States will continue to have a boosting role.
I did want to follow up on China because you mentioned the slowing of the second largest economy in the world. They've got this very strict COVID zero tolerance policy where they shut down cities of millions of people on cases, which is still happening. Is that too detrimental to their economic growth and the growth of the world?
Well, there are three things that are happening in China, and they're all significant. One, consumption hasn't picked up the way it should to compensate for the other disruptions in the economy. Two, policy support has been pulled out perhaps a bit prematurely. And three, we have the situation with very dramatic action to contain COVID. And of course, we had the property markets developments. So all of this is holding the Chinese economy back. The positive side of the factors leading to that situation is that one of them is policy support, for which China does have space. So we need to see how they go about it. As for the zero COVID policy, we do believe that those that have adapted to function with COVID still around us have a remarkable revival of their economies. And what are the factors that play a role? Well, level of protection, level of vaccination, testing, and other measures. And how effective is the shift from some restrictions to no restrictions back and forth. So China perhaps should start to look into what other countries have achieved. You see how every wave of COVID has lower impact on the economy than the one before.